Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.
Hey, what's going on, guys? It's Brinks Trades here, back again for another weekly breakdown of the indices markets. So that's US30 or the Dow Jones, NAS100, and which is NASDAQ, and then US500, which is obviously the S&P 500. So again, if you're not familiar with me, 10 years of day trading experience, and I started out in Forex, but obviously right now we're going to focus primarily on the indices. So let me go ahead and get my screen pulled up and share with you guys. And if you're live in the chat, feel free to throw some comments in if you can see my screen. Let's see. So let's see if we got, nobody said anything, but hopefully y'all can see. If you can't see, let me know. So what I want to touch on is, like I said, again, the outlook for US30, NASDAQ, and S&P 500. So again, once we, whenever we come to the new trading week, we always want to start with an overview, a breakdown, and I always start with the dollar index. Why? Because the dollar is king, right? So if we look across any market, we know that the dollar really has, price fluctuations in the dollar really affect every other market, whether it's, indices, Forex, metals, right? Like any market, the dollar directly affects that. And so last week, we came into the prediction, or into the chart, and made a couple of predictions. So we started out in the monthly time frame and really just wanted to do a top-down analysis on where we're at in dollar. So looking at the monthly time frame, we traded into this imbalance and fair value gap here after rejecting out of this bigger imbalance here. And so, we made a prediction on the dollar that we wanted to see potentially lower prices initially to start the week off, but lower prices to inevitably go higher, right? So after trading into this imbalance, we wanted to see some type of price rejection from that range. And that's exactly what we got. So if we go down to the weekly time frame, we can see, again, going into last week, if we back this up 1 week, what I wanted to see was price potentially go a little bit lower, but a little bit lower down to this level or this level to inevitably go higher and take out these relative equal highs here and eventually hit our long-term target, which is sitting at 107.92, right? And so if we go down the daily time frame, again, looking at this volume imbalance here, this fair value gap here, I thought there was an ample amount of liquidity that might need to get grabbed here before we went back up. So potentially wanted to see price retrade into this zone. And so what we ended up inevitably getting was price filled in this small little volume imbalance here, and then traded back up into this fair value gap that begins at 105.12 and goes all the way up to 105.63. And so ultimately, I'm still bullish on dollar. So again, I wanted to see price come and take out these lows and really give us a reason to go up, whether it was at this level, or this level. And so what we're getting here is price testing out of this and retesting this imbalance. So what I would like to see over the course of this week, if we go on dollar, I would like to see price inevitably give us a reason to attack these highs, right? And so looking, it could be a retest of this zone here. If we go down to the 4-hour time frame, we can kind of get a little better understanding. So a retest of maybe these lows in here in this fair value gap to inevitably go higher. And so what I'll be looking for this week is for dollar to hopefully retest these highs at 106.98. Eventually, we're making our way to that level. It might not all happen in 1 week, but eventually I'm looking for price to take out these highs and trade back up into this imbalance, right? And so long term, what we're looking for is a bullish dollar long term, right? This is our long-term target. looking for a bullish dollar long term. So what I would like to see is, I'm just going to make a note of that so everybody can see. Long-term bullish dollar, right? So for long-term bullish, we should be opposite for our indices, right? We should be looking for bearish opportunities in the indices. Now, this past week, the indices market was actually flowing in conjunction with the dollar for a portion of towards the later end of the week. And so going into last week, want to just kind of replay what the ideas that we had. So last week we wanted to see potentially a bearish dollar. So I told my students this idea of trend line liquidity, right? And so I don't necessarily trade trend lines. I don't really look for buys and bounces off of them like most traders might traditionally do with technical analysis. So I look at these as opportunities for where the liquidity is resting at, right? So we know there's going to be money here, money here, money here, and we know the market's going to want to go get that liquidity, right? So inevitably, what we wanted to see was prices and flow a little bit higher on our indexes, and that's exactly what we got. And so we're making the note that prices are flowing. Usually, the indice market flows against what the dollar is doing, or the opposite, has an inverse relationship. But this week, it tended to flow with it, and so that's something that we'll make a note of. That could signal a long-term reversal in one of the pairs, that divergence. So inevitably last week we had a couple targets that we wanted to see. If we look at the weekly time frame, actually if we look at the monthly time frame, just kind of zoom things out since we're still kind of in the beginning of a new month. Inevitably price traded inside of this imbalance, dipped down into this fair value gap here, and started attacking these highs on the buy side. And so I made the first week I did a call with you guys. I made the call out that every month or every quarter, there's a new quarterly objective that tends to happen every 3 to 6 months in the market. Not always, but can happen. And so this rejection from this imbalance was the start of that, I believe. And so what we're looking for right now is for price to continue on with this uptrend. And so if we go down to the daily time frame on NASDAQ, there's a couple of things that I was looking for this week. Really, the weekly draw on liquidity was this level right here. And I wanted to see price take this level out coming into last week. That was last week's analysis. And what we ended up getting was over the past week, there we go. Over the last week, we ended up seeing price come in and take out this high in the buy side with liquidity resting above it. So coming into this week, again, I don't pick the tops and bottoms on trends. So if I want to see price reverse, it's going to have to give me a full out break of structure before I start calling the top on an active market movement, especially on the higher time frames in the daily. So again, I'm looking at this level right here. I want to see price come back and give us an opportunity to retest this level. So I would like to see, in an ideal world, price retest this level of 397.6 on NASDAQ and really give us an opportunity to get rid of this. Really give us an opportunity to continue on this uptrend and look at this level here. Inevitably, I think we might end up reaching for this high, but kind of taking it week by week. And so what I would like to see here is price trade back to this level at 399.8, and then again give us an opportunity to go long and take out these highs at 15,629. So potentially a 3 to 400 pip, 3 to 400 point swing on NASDAQ this upcoming week on NAS100. So that's what I'm looking for NASDAQ. If you go down to the 4-hour time frame, just want to see if we can make this a little bit tighter. That 15,395 level is where I'll be looking to try to look for long opportunities. So there you go. So if we move on to the S&P, really good call out. So going into last week, what we wanted to see was, again, prices tend a little bit higher. And so if we go back 1 week to where we were at, I wanted to see prices trade and really take out these relative equal highs right here, right? They're very apparent. We're sitting inside an imbalance. This could signal a longer term turnover. And so what I do is I use all three of these indices basically to kind of give me an idea of market direction and seeing that we're, inevitably going to line up with the overall trend. And so, if we are looking for a bullish dollar long term, inevitably we'll probably see a bearish swing in indices at some point. I don't know if it'll be if we take out this high or if we take out this high or this high. But if we're predicting long-term dollar bullish, we're inevitably probably going to see long-term indices bearish. And so when we came to the S&P, there was there was an opportunity to take out buy side liquidity sitting over these highs, right? And so we saw these highs here. They're very, very prominent, very, 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 very clear. And so, what I wanted to see was price eventually inevitably trade up into these. And once we took out the liquidity over these highs, anybody's guess as far as whether we'll continue the uptrend or continue to go down, since we are sitting inside of a SIBI or a sell side imbalance, buy side inefficiency, right? So I wanted to see price come in and take these out. So going into this week, I wanted to see, again, price take these out, and that's exactly what we got. So if we go down to the daily time frame, again, looking for the buy side liquidity to get hit with these highs. I also noted here that there is a huge fair value gap that's sitting right here, right? And so inevitably, I wanted to see price kind of retest these levels and hit this gap eventually. And so what I'll be looking for this week, again, I don't look for heads and tails or tops and bottoms on the market. I'm sorry. I just trade until the market gives me the confirmation that we're going to go in the opposite direction. But me keeping in mind that we are sitting inside an overall sell side imbalance that needs to get respected at some point. And if it doesn't, then we'll again continue on with the bullishness. So what I'd like to see this week coming in is after taking out the buy side liquidity that's sitting at 44,432, I want to see price just trade back into this zone and then really give us a continuation higher to fill in this fair value gap. At this point, this could be the overall liquidity that we were reaching for, which could give us an opportunity to continue that downtrend that I had mentioned previously. If you look at the weekly time frame, right? So if we go back up to the weekly, obviously we're sitting inside a SIBI. So that could be the opportunity that we were looking for to continue the overall downtrend, or we just kind of disregard price and we'll be looking to take this, use this as an opportunity to go long even more, right? And so that's what I'll be looking for. But inevitably for the first part of the week, in the pullback, I'm looking for price to trade into this SIBI here, and then go take things a little bit deeper. So that's that's the S&P. And then I'm going to switch over to the US500 just because it's a little bit different. As you can see, we already hit that imbalance. And US500 and S&P, they're the same thing, just obviously one is for the international markets and one is for the US, right? And so if you look at for 4,000 or 4,400, price was hit into that SIBI here. So we actually did go a little bit higher. And so again, I'm not going to pick the tops and bottoms on the trend. I wouldn't be surprised if you see a little divergence between now and next week where the prices get held in US 500 and while the S&P goes into that high a little bit. So that's what I'll be looking for. So inevitably on US 500, just want to see price continue on into this imbalance. If we see for the first part of the week that the prices are held, then inevitably we might be looking for a reversal. The last pair I want to touch on is US 500. I'm sorry, US 30, Dow Jones. And so I was in the comments just a second ago, and it looks like someone said, I was waiting for US 30 to make that inverse head and shoulders on daily. Let me see. On the daily, the inverse head and shoulders. Oh, right here. I can see what you're saying. Yeah, I kind of see what you're saying here, but inevitably, I think we're looking for higher prices. We're trading inside of this imbalance here, this fair value gap. So I think we might inevitably get a pullback from this range, inevitably, but I think that might take a week or two to play out. We are sitting inside of that weekly fair value gap inside of a daily imbalance here too that we just hit. So again, I wouldn't be surprised if we did fall over and start to trade to the downside on this at some point. So this is what I'll be looking for the week to start off. Probably trade a little bit higher into this imbalance and then fall over, or at least respect. Let me go back down. Yeah, at least respect. We just took out buy side liquidity sitting in this highs. We just filled this imbalance here, this daily imbalance from this high to this low. So like what I would like to see is price at least trade back down here. And it might inevitably give us that inverse head and shoulders that you were talking about. Sorry, your name, that Joey Lentz was talking about in the comments. And so that might be inevitably what happens. But I'd like to see price, give us an opportunity. Again, not picking the tops and bottoms on the trend, but I'm probably going to be a little bit more patient on Dow Jones. I don't personally trade Dow Jones. I just kind of use it as a barometer to see what the other pairs are doing. It's just a little bit more wild for me. I usually only really trade NASDAQ and every once in a while trade S&P. But again, do the analysis on US30. So again, I'm going to be waiting to see, since we reached the zone, I'm just going to be waiting to see what happens in this range. So if we do get a pullback from this range or a rejection from this range, the next area that I'll be looking for is this sell side or buy side imbalance, sell side inefficiency here at this level. Let me zoom this over and seeing how, if price trades into this to go higher, or if it just uses this as an inverse fair value gap to continue to go lower. Again, we've already kind of reached our target. We reached a daily imbalance inside of a weekly imbalance here. And so, pretty much just kind of have to sit on our hands here to see if we get an opportunity to continue the trend. If we do go long on this and kind of line up with some of the other indices that haven't reached their target, like US500, then we could be looking at the sell side or buy side liquidity over the high at 35,000 or 34,770. But for this week, I'm pretty much just gonna wait. And so what I use, and whenever I do these breakdowns at the beginning or the end of the week, before the next week's market action, I always kind of pick one pair to focus on, and that's kind of like my lead pair. And usually I focus between NASDAQ and the S&P, just because they're a little more tame. But whichever one's the clearest, giving the clearest market direction out of those two, are the ones that I'm really focusing on. And so right now, that winner, I guess, for this week is probably going to be S&P. So I probably will end up taking more trades on the S&P/US500. So if we go to US30 again, I'm looking to see what happens here. If we take out this low at 33,000, then I'll be looking to trade into this imbalance here at 35,531. I think overall long term projection, I would like to see price continue to trade lower if we're looking at the weekly time frame. So if I zoom out, look at the weekly time frame, we filled this imbalance. I'd like to see some type of rejection back into this gap. And I think once we get here, then I kind of just have to sit on my hands and see if we're going to continue prices lower and inevitably reach these targets that I called out at the beginning of the year or beginning of the quarter, or just trade higher in alignment with with NASDAQ. And so things are a little bit clearer on the S&P most of all. So you might see me take more positions in my Telegram group. I post a lot of the positions that I take. You might see more of those on the S&P this week. Go to the comments. Yeah, Joey says in the comments section, I'm gonna show this comment. Looks like it broke the net line, so it's probably dead. I can see it. It did break structure here. I think we're inevitably going to trade back down. I don't know about the inverse head and shoulders to go up again. I don't think we're going to get that. I think if we do fall over, then we're going to start looking for lows. And so this market rally that we got was really just to fill old imbalances and really take things a little bit lower, in my opinion. And so I think long term, even on NASDAQ, if you go back here, we're seeing, us take out highs. I wouldn't be surprised if we take out either this next high or this top of the high at the beginning of the year, and then continue to roll over. I don't think we're in a bearish market at all. I think things are going to get a lot worse overall. But we're going to kind of have to take things week by week. And that's the biggest mistake that I made trading early on in my career, was really just looking for opportunities to hit home runs and not take things day by day, week by week. So I think long term the market is going to be bearish in the indice market, just like I think long term the markets are going to be bullish in the indice market or in the dollar index. And so with that in mind, I'm kind of trading along with that bias for the future, but taking things week by week. And so week by week, I'm still looking at buy side targets, but I think long term we are gonna go down. It does have a fairly map where that head and shoulders would be. Yep, I noticed that too, and that was my call out, Joey, as well. So Joey also says, I'm gonna show these comments because they're not gonna show on the replay. It does have a fair value gap on the daily where that shoulder would be. Yep. So that could be the place where we would look for a transition in the market to go to an uptrend. But as of right now, we kind of have to. We don't want to, catch a falling knife, right? So we got to kind of have to stick with the trend as it is right now. Right now, it's showing us buy side, looking for buy side on NASDAQ. It's looking for buy side on US500 still. And so inevitably, what I'd like to see again is price rollover. But again, we're not trying to catch falling knives out here. So the market's got to tell us that it's time to go down before it goes down. And so right now, looking for those targets, buy side targets to hit. If we get breaks of structure below there, if the market gives us a clear break of structure once it hits this fair value gap or even goes out and takes out this high, then I'll start to look for sell side targets again. But as of right now, that's what I'm looking for the buy side. And inevitably, hopefully, I do kind of hope the market goes down and tanks because it plays into the bigger bias that we're seeing on the bigger time frames. I think this is the area at 4,230, 4,259 that Joey was calling out right there. And so, yeah, we could see the transition there, but inevitably we can't, project before we actually get confirmation, right? So that's what we are looking for. So let's see. Just want to read some of these comments. Someone says, Yutufi says, can you check XAU USD, please? So I personally don't trade gold. I think XAU is gold. Gold is a really event driven market, and so that's for me. I personally don't trade it a lot, just because I think a lot of more people trade gold than they should, like on a regular basis, because it's so event driven. So right now it's very volatile because of the whole like Ukraine, the war situation that's going on. That might be a reason why it's driving up. So I personally don't look at it, but maybe I'll take a look at it this week and have a bias for next week. Let's move up on Friday because I fell in love with the possible. Yeah, Chris, that's exactly what I was saying. So Chris had a really good comment here. I'm just going to post that. So he said, yeah, I missed the move up on Friday because I fell in love with that move, possible mistake. And one of the biggest problems I had as a developing trader was trying to project moves before they happen. And I still get in trouble with it, right? So sometimes I'll look at the charts and I'll see stuff before it happens and trade it based on it. But you got to let the market play out and give you the confirmation. And it's great if you're trading off these bigger time frames, even with US 500, right? Like long term, I think the market is going to go down. I think the market is going to tank and be bearish, but we got to wait for that to play out. And so there's been times where I thought immediately, okay, cool. Like we go to the weekly time frame. Oops. We go to the weekly time frame. Okay, cool. We hit this weekly fair value gap. Okay, just sell immediately, right? And that's cool if you're long-term trading, but just know that there's a lot of imbalance that has to be rebalanced inside of this weekly time frame. This could be a few weeks before we finally just turn over and die, right? So, and if we don't, you got to be prepared for that risk as well too. So long-term trading, you always have to work within your small frameworks, not try to work like 5 days out, on the long-term trends. So I'm not too sure about gold. Again, people keep talking about gold in the comments. Maybe I'll take a look at that and see. I think there's one more comment that I have here that I'll show. Given this confluences, do you ever look at forex pairs and trade with correlation with influence against Y? 100%. So I don't do the analysis here for forex. You know, if you guys want to see me do, I guess maybe some Forex breakdowns as well, you know, throw some, you know, when this video gets posted and the stream ends, come back to the video, leave some comments here because those comments will last, you know, a long time afterwards. But, you know, throw some comments in the chat and say, hey, we want to see you break down Forex stuff too. But no, I do trade Forex. I do trade just mainly the majors like Euro, GBP, USD. If you check out my Telegram chat, it's a free Telegram. I don't charge anybody for anything. I do have a mentorship group, but it's a very, very like private thing. I only work with a few people. And I'm not really trying to open it back up right now. But I have a free Telegram analysis. It's in the chat. It's tick ups. And I do a lot of my breakdowns for people in those chats. So if you're there, if you're subscribed, you can see the ones that I do for Forex stuff. There's again no fee for that. I give that out to the people for free. And so given this confluence, I do trade Forex pairs, going back to your question. And you know, I do use that analysis. So basically, you know, if I'm bearish, I guess just high level, if I'm bullish on the dollar, then I'm going to be bearish on indices. You should be trading against that. And so a lot of people only pick one Forex pair and they say, this is my pair. I don't look at anything else. I look at the entire market as a whole. And you have these intermarket relationships that should be utilized when you're looking at some pairs. You shouldn't be trading dollar bullish and euro bullish at the same time, right? So or euro USD, I guess, or the majors. So they should be correlated. So that kind of helps as a fail safe on my analysis too. So hopefully you guys appreciated this. I'll give it a second to see if there's any more comments or questions. But again, thank you to the TradingView platform for giving me, the platform to talk about, and break down the charts. And if you guys have any more questions, you can hit me in the Telegram group. It's tick ups. There's a couple comments in here. You should be able to see it. But telegram.com tick ups is the chat. I think, like I said, it's posted in here a couple times. But in there, I do updated weekly analysis because sometimes my bias changes throughout the week depending on what happens, right? So, like even on NASDAQ, if we just get a continued crazy bullish high and it takes our S&P, we get a high and it just trades past this fair value gap, then maybe my analysis is going to change right throughout the week. So if you want to stay up to date with that, please subscribe to the Telegram chat. Again, no fee at all. So thanks again to Trading Nut. And if you guys have any questions, you can hit me there. So appreciate it. Peace. Have a good weekend.